Aside from a few bearish events, it's been months since we've had such a bullish week in the crypto space. Hello, I'm Crypto Casey and welcome to another episode of Crypto This Week. Every Sunday, we explore the latest global news stories affecting the crypto markets, as well as the ever-changing macroeconomic environment of the world at large. Be sure to check out our sponsors, Efani, NordVPN, and Ledger. Protect your cell phone from SIM swapping attacks using Efani's secure mobile services. Protect your data, privacy, and crypto investments by using virtual private network services with NordVPN. And protect your long-term crypto holdings with cold storage hardware wallets provided by Ledger. Check them all out using the links in the description area below. Awesome! Let's hit Crypto This Week. There were only about 3 bearish news events from the week, and after we explore them, we will hit a nice flurry of bullish cases. First, payrolls increased 528,000 in July, much better than expected and a sign of strength for jobs market. Markets initially reacted negatively to the report as traders anticipated a strong counter move from a Federal Reserve looking to cool the economy, and in particular, a heated labor market. However, the Dow Jones Industrial Average ended the day positive, rising about 74 points following a day of choppy trading. Why is it seen as bearish by institutional investors that wages increased more than expected? Well, the market has been worried about increases in wages coupled with increasing inflation, which would create a wage price spiral. What is a wage price spiral? Wage price spiral is a phenomenon where as prices of goods and services people need to live increases, workers start to demand increases in wages to keep up with inflation. But then as labor costs increase for businesses, it causes them to increase the prices of their goods and services to maintain profits. This creates a spiraling effect, like a circle where increased inflation leads to increased wages, which leads to further increases in inflation and further increases in wages, etc. So these latest numbers have investors thinking the Fed will likely do another 75 basis point rate hike next month, whereas if the report had shown a decrease in wages, they considered the possibility of the Fed entertaining a lower interest rate hike. Second this week, every U.S. crypto exchange and Binance is being investigated by the SEC, says Senator Loomis staffer. Widely circulated reports that the U.S. Securities and Exchange Commission, SEC, is investigating $20 billion crypto exchange Coinbase are just the tip of the iceberg, according to a staffer from U.S. Senator Cynthia Loomis's office. The staffer says every U.S. crypto exchange and the largest crypto exchange in the world, Binance, are in various stages of being investigated. There are more than 40 U.S. cryptocurrency exchanges, according to crypto data site CoinGecko. The SEC has not responded to multiple requests for comment. The SEC continues to ominously lurk around the crypto space, which is a double-edged sword in that yes, we need more regulatory clarity. However, SEC Chair Gensler is seeming to be far more of a foe than a friend to us retail crypto investors right now. We shall see. And finally, the third bit of bearish news. Thousands of Solana wallets drained in a multi-million-dollar exploit. Solana, an increasingly popular blockchain known for its speedy transactions, has become the target of the cryptosphere's latest hack after users reported that funds have been drained from internet-connected hot wallets. An unknown actor drained funds from approximately 8,000 wallets on the Solana network. Solana's status Twitter account said, it's estimated the loss so far is around $8 million. The attack, which has only affected hot wallets, or wallets that are always connected to the internet, allowing people to store and send tokens easily, does not appear to be limited to Solana. The attack has compromised other wallets, including Phantom, Slope, and Trust Wallet. Initial reports were suggested Solflare users were also impacted, but the company tells TechCrunch it has not been affected by this exploit. Wallets drained should be treated as compromised and abandoned, Solana warned, as it encouraged users to switch to hardware or cold wallets. And if you haven't gotten yourself a cold storage hardware wallet yet, don't wait to become a victim of a hack or an exchange going bankrupt or limiting access to your crypto. Scroll down to the description area below to access the correct and official sites of my recommended hardware wallets. Never buy a hardware wallet from other than the official websites listed here to avoid getting a hacked device. BC Vault is my personal favorite. The Ledger devices are another more cost-effective cold storage hardware wallet option, so scroll down to check them out. Amazing! Let's ride out the rest of this episode on a bullish wave of crypto development and adoption stories. Before jumping into it, a quick note about our sponsor, NordVPN. As a crypto investor, using a VPN is an easy, effective, and important way we can further protect ourselves and our investments. VPN, or virtual private networks, prevent people, companies, and software apps from watching and tracking your online activity, which as a crypto investor can protect you when you're connected to public networks, as some hackers have ways to steal your data when connected to public networks. My personal favorite VPN provider is NordVPN, and if you use the link below to sign up in the description area, NordVPN is offering us their 2-year plan at a 70% discount with 1 month completely free, so you can try it out. This works out to be about $3.70 per month, the price of a cup of coffee, or probably less than that because of inflation, with the benefits of protecting your privacy and your crypto investments. It's extremely easy to set up and very user-friendly, which is great whether you are a new or experienced person in technology. You can pay for NordVPN services in both fiat or cryptocurrency, so be sure to scroll down to the description area below to redeem their offer. All right, let's quickly go through a flurry of bullish news. This week, a report shows that global professionals increasingly are interested in Bitcoin and crypto payments. The ongoing market downturn has not discouraged professionals from taking payment in crypto assets, as indicated by the latest report released by global payroll specialist Deal. In the first half of 2022, crypto payments represented 5% of wages collected by cross-border professionals, up from 2% the preceding 6-month period. Nice. And who wouldn't start getting interested in receiving crypto as payment when, just this week, Coinbase's BlackRock pact cements crypto status. BlackRock to offer crypto for institutional investors through Coinbase Prime. The asset management giant and the crypto exchange have partnered to broaden access to crypto among institutional investors. Yes, I know a lot of us are wary of BlackRock. However, we need to be mindful of the fact that the market cap of the entire crypto space is about $1 trillion right now. And if this industry is going to be taken seriously and survive the long term, we need to get up to several $1 trillion over the next few years. Institutional money will be an important and efficient way to increase the crypto space's market cap. And as we've been discussing on the channel for a while now, there is a lot of institutional money on the sidelines waiting for more regulatory clarity before jumping in. Until then, we retailers have been doing some test driving with one of the most promising future use cases of blockchain technology. Gaming claimed record 60% of blockchain activity in July. While decentralized finance and overall blockchain activity have been on the downside, Game Unique Active Wallets, UAW, continues to rise, reaching almost 1 million daily wallets, Pedro Herrera, DappRadar's head of research, told CoinDesk in an email. Although game tokens also suffer from challenging market conditions, blockchain games continue to be played at growing ratios. With relevant gaming events like the Sandbox Alpha Season 3, Illuvium's beta gameplay, Gala Live Games, or Axie Infinity's land staking available, Web3 games are shaping to be the industry's driving force for months to come, Herrera added. Sweet. And if you haven't yet, check out the crypto gaming projects I have my eye on by clicking on the link above. More developments in the gaming sector this week. Play now, pay later. Halliday bags $6 million seed round led by A16Z. Halliday, a startup founded last November by Akshay Malhotra and Griffin Denave, is building a buy now, pay later style financing product targeting gamers who want to pay off in-game purchases over time. It's quite remarkable that video games, these virtual worlds, now have fully fledged market economies. In these worlds, you have digital property, digital ownership, and items with real-world value. One thing we were struck by was that because these things have real-world value, it can actually be quite difficult to acquire them and have ownership. And one of the fundamental tenets of blockchain is that ownership, CTO Denave told TechCrunch in an interview. Cool. So what we are seeing is finally a shift from Web3 projects relying on a narrative to get investors to actually offering value and utility. Big corporations are noticing and starting to build in the space as well. Starbucks to unveil its Web3-based rewards program next month. Starbucks will unveil its Web3 initiative, which includes coffee-themed NFTs, at next month's Investor Day event. The company earlier this year announced its plans to enter the Web3 space, noting its NFTs wouldn't just serve as digital collectibles, but would provide their owners with access to exclusive content and other perks. Sweet. And one of the OG or original companies to take the crypto plunge, Gucci, leads in crypto transactions. Gucci began accepting cryptocurrency in a few stores in the United States in May of 2022. Now, about 70% of its full, directly operated stores accept cryptocurrency. The remaining are not expected to be left out for long. Gucci was the first brand to accept crypto, and this week was the first brand to accept ApeCoin. With the addition of ApeCoin, Gucci clients will have a dozen options to pay for goods with digital money. The brand now accepts Bitcoin, Bitcoin Cash, Ethereum, Wrapped Bitcoin, Litecoin, Dogecoin, Shiba Inu, and 5 USD pegged stablecoins. The Italian luxury brand dipped its toe in crypto with just 5 stores initially, but saw fit to expand quickly to attract luxury customers. Nice. And NFTs had a massive week as Meta enables Instagram NFT integration in over 100 countries. Mark Zuckerberg's company, which posted a sharp loss in its metaverse division in Q2, unveiled its digital asset expansion strategy on May 10, 2022. One needs to simply connect their digital wallet to Instagram to post an NFT. The company said in its updated post, third-party wallet integrations with Rainbow, MetaMask, Trust Wallet, Coinbase Wallet, and Dapper Wallet are either complete as of Thursday or are coming soon. Supported blockchains at this time are Ethereum, Polygon, and Flow. There are no fees associated with posting or sharing a digital collectible on Instagram. Brilliant. And even one of the oldest, most traditional entities in human history is starting to feel the FOMO. Crypto Catholics, Archdiocese of Washington first to accept cryptocurrency donations. The Archdiocese of Washington says it is happy to accept cryptocurrency donations, even if parishioners can't physically put Bitcoin into a collection plate. It's believed to be the first Catholic diocese in America to announce the capability. Crazy! And bullish for sure as more money continues to pour into the space despite the bear market. Former Palantir engineers raised $20 million to simplify Web3 tooling. The 2-year-old company was founded by former Palantir engineering leads Galen Marchetti and Kevin Today, in hopes to simplify the tools for developers building on Web3. It currently provides services for Ethereum, Avalanche, and Near ecosystems. Cool. In another project getting funding this week, Lattice Capital raises $60 million for second crypto fund. The early stage focused fund is 3 times larger than the inaugural fund last year. In a crowded venture capital landscape, Lattice stands out because of its work with founders of the companies it invests in, helping craft go-to-market strategies and the firm's focus on early investments, general partner Reagan Bosman said. And finally, more aggressive moves by crypto companies to create awareness and drive adoption, as crypto companies are spending $2.4 billion on sports sponsorships. Crypto.com, Coinbase, and FTX are moving aggressively to match the marketing muscle of car makers, beer brands, and other big money advertisers. Awesome. Well, that was Crypto This Week with me, Crypto Casey. If you enjoyed the episode, please make sure to like this video, subscribe to the channel, and click the bell notification to stay up to date on all of the latest videos. So, was this week more bullish than you anticipated? Which story was your favorite? How has your bear market journey been so far? Let me know in the comments below. Be safe out there.